Welcome everyone, and my name is Mike Hamilton from Trade the Easy Way. If you are viewing on YouTube or in the Zoom room, welcome. And usual format, just going to do a quick 20-minute review of the market. It's non-farm payroll, it's US monthly jobs on Friday. Aussie rates, what else we got? CAD rates. That's about it. I don't think we've got much on the UK front. There's a quick reminder of what's on the UK. Not a lot. New car sales have jumped in the UK year on year. Wow, that's a bit of a surprise. What else? House price inflation. Friday, we've got month-on-month GDP. We're looking for 0 on GDP. So what I'm looking at the moment is the dollar index. Because if this continues to slide under here, I think that gives the markets a chance. If, however, we're falling into support, so if this dollar index falls into support and holds and pushes up, then I think we are going to see some retracements in the markets. So you can see so this is divergent with the markets. So since the October-November drop, we've had a good start to the year. So this was convergent with the markets. So if these markets are sustain themselves, I think we need a continual fall back into this zone here on the dollar. Any significant push up in the dollar could affect that. Let's have a quick look at Bitcoin. So hi Patrick, you've not missed much. We just talked about the dollar falling back. Here we are looking at I want to look at Bitcoin because I think we need to fall back at least at this 19.8. I don't think this is going to fly up here. Mind you, I've said that before, and gaps can stay open for a long time. Right, let's have a look at the FTSE first. So the FTSE at the moment on the weekly chart is not going anywhere at the moment. Key extension up there at 79.60. We dropped today, picked up into the close. I would like to see this pop back up above this area here. I think this 79.60 is still shortable, but if we can get higher, all the better. I would love to get into that closer to the 80 level. If I'm wrong about this, we're going to close above this 79.60 and break through 8,000. But at the moment, I'm still shorting highs, and any opportunity to get underneath that trend line back into the 21st of Feb level, or ideally the 23 highs. 23 highs at the moment are 80.46, give or take a pip or two. But I will continue to short that. Like I said, I will even shorten to 79.60 tomorrow if I'll take a look at it midday, UK time midday, and see where we are. See if we're getting some intra-week sell signals. Right. Let's look at gold. The gold's had a very nice run up from the Tuesday the 28th. Oh, excuse me. And we are just pulling back. So if that is wave 1, wave 2 could come right back into this 2nd of March level and come and retest this trend line. It is possible, particularly given we got jobs. The dollar strengthens on the job numbers. We could pull right back into that, which would take it down to about 1818, 1820. If that is too much of a drag down, then I think the next is that Friday support, 1839. I think the most likely scenario is we'll see 1839, 1840 again, unless the job number shoves that right back down again. If we look at silver, same story, but again, I think the most likely pullback here is that 2095. That's the breakup area from the 29th of November. So that would make sense. If we see 2095 again, I would add. And then I'm looking to see if we can punch up to at least 22, short term, 22. Long term, I think we might be able to wiggle our way up to 26, 27 plus. I've talked about the wheat. So let's go and look at the wheat. It's not unusual for commodities to break support. What's going to be crucial is if we get back above 1725. If we get back above 1725, then I think we're on. If we stay down here and obviously go lower, then I will potentially just jump ship. But at the moment, I'm still buying this $6.95, $7, and then hoping to see if that wheat can close above 7.25. Like I said, close above 7.25, and I think this will ignite this wheat and see that climb back. So I'm not at all perturbed about the depths here. If you look back far left, we were down there at September 21. So it is possible we're going to see some lower numbers. But I'm anticipating this $7 on the wheat will hold. Let's have a quick look. Let's just fly around a few other commodities. So the gas has had a lump higher. If we get into the back end of this month and into April and find ourselves down there at 22.50, I'll be buying. I'm backing off this at the moment, but if we 18 will be even better. I would anticipate that 22.50 would hold on the gas. And we've got, let's look at high grade copper sitting up, looking as if that could, we close above the 40-41 mark, that looks higher. Coffee, I think this is a lot of support here on the coffee. So I think if this 1780 holds, I think we could go back to, I think we might be able to break through 20 next, because we have potentially got, this is a huge wave one. Wave 3 is shorter, this may not work. Well, let me see this another way. Now, let me come back to, let me leave that for now. This is a 3-wave corrective wave into all this selling, and we close under 17.6, then we could come all the way back down here to 15. I'm bullish these commodities, so I don't think that's going to happen, but I'll just stand aside for that one for the moment. Right, let's go back to, we don't often look at Forex. Let's have a quick look at the pound and the euro. Pound, we've got Fed and Bank of England meeting next week. Is that right? No, it's end of the month, isn't it? 22nd. We've got triple witching in the next week, St. Patrick's Day on the 17th. And then we got the Fed. I should have marked this in my diary. I believe it's the 22nd. Right. Bit of no man's land at the moment. If we break that support, we're lower. We've had a good 2023 start, so we're falling right back into the January support. So if we close above this 120, I think we could push back higher, maybe break back up to the 23 highs. Euro. These lows down here at 105 are not on great volume though, is it? Well, it looks this January low has held, and we look as if we can at least see 107, close above 107. I think that could pop up. I think the euro of the two is going to be the stronger. Euro ECB have lagged Bank of England. I think they need to play catch up. So I think these pullbacks are bought. We're at resistance at the moment, but any pullbacks to 105, 106 are viable to see if we can get back to 107 plus. Potential bull flag there. So we had a great push higher into the back end of last year and a good start to the year. So I think these pullbacks are viable on that euro. And moving on, let's have a look at some stocks. So I'll close my eyes while we look at Rolls-Royce. This thing is just looked dead in the water and then just flew. I think we're getting to the stage now where we're overcooked. So at some stage we may drop back to 1010. I think that's too far too fast. Could be wrong. I mean, it's not slowing down. Well, the last time we did this in September 21 and fell right back. So if we do a repeat of that autumn 21, this could peel right back in there. Anyway, I think the Vodafone and BT might flip up as well. There was a big Middle Eastern fund that bought into Vodafone recently, if my memory serves me right. And BT is already looking as if it might do a Rolls-Royce on us. Yeah, this is already into 50% of last year. So I think any pullbacks to 140 are viable. So we come from 108, 108, 110. Have a nice wave pattern to the upside. So any pullbacks, once these things run, it's much, much harder to get into them. I certainly wouldn't chase. So any pullback to 140, I think is viable. At this rate, I'm not sure we'll see a pullback to 140, but be patient. Barclays, huge drop on the 15th. It's not recovered. I think that needs a deeper pullback. Again, this blasted up from 154, 155. So you might see that peeling all the way back. And what else? Let's look at some miners. Pan-African dropped very hard down to 13. Retest of that 20-day average has sold so far. Not significant. That bounce was not on significant volume. But if we come back to 12.5, 13 and hold on volume, I think that Pan-African is a buyer. Let's stick with miners for a minute. Hochschild. is okay. Now, if we peel back into this 62 and hold, I think that could go higher. Griffin. Not bad volume today. That's not that long ago we're up there at a pound, so I will keep an eye on that. Certainly keep an eye on it. I think Hochschild is better. Capita, yeah, I've been looking at Capita. I see that as a bit of a miss, actually. Glad you raised that. Wow. I knew that that's gone crazy, isn't it? So back here in April last year, we were 20. We're now nearly 44. We had a decent signal there on the 1st of March on volume. Well, the volume picked up on the 1st of March, then we blasted off on the 2nd. And we are not looking back. Barclays went ex-div, right, okay. So I might see some lower numbers in Barclays. That's your TGAT, isn't it? In line with other, so huge area here for this one. 7th of July. On the 7th of July, this went on a big run. And it came from 895. So keep an eye on this one, because the volumes pick up on that one, that might go as well. Right, let's come off the miners and look at some retailers, because I'm amazed at what some of the retailers are doing. Boo. Wow. So that was down there at 33. That's 56. And the, as seen on screen, where is it? This is ASOS. So that's hit resistance as well, a low of 450. I mean, if you're interested in these, I think they've got legs, but I would, on this ASOS, I would definitely look for a significant pullback rather than coming here. Any pullback to 825 is a potential buy on that one. I'm just very, very cautious on anything to do with the consumer. So I would suggest you do that as well. The shoe zone just won't lie down. Still keeping a close eye on that one. There's a gap up there at 260. I'm going to set an alert for a short on a potential gap fill on that one. Yeah, so Sainsbury's sitting up at resistance, EasyJet having a good run. W.H. Smith's, that's been on a good run and has subsequently pulled back and is looking good. Let's go to financials we've looked at. Let's look at basic materials. Elementis hit resistance. So this has been on a sweet run. I talked about this a few times last year. Chemicals, UK chemicals company. So that's done well off of that 90 to go into 130. You know what? If that gets down to 110 and holds, I would get back in that one. Glencore. That 490 is a really good potential buy zone on that Glencore. What else have we got? Rio. It's pulling back after a run, and we've got another sector. This tallow is getting interesting. I do like the way the volume is picking up down here. I think that tallow is worth a trade. 34, 35 with a stop under 30, 31, or really need to go under 30. Because if that breaks out of that little triangle, I think that could go into 40 plus. On volume alone, that is a good one. Results on Wednesday, right? Okay. This one, this is iGas. This reacts very, very closely to the gas price. This one. Let's steer clear of that. I know what I was going to look at. You talked about John Wood last year. John Wood's had a good run as well. Yeah, that's spiked up. So any pullback on that one, around about the 150, 160 mark on that John Wood. That's fallen. This squares has fallen out of favour, so let's ignore that. You think it's a takeover target, right? Well, share price suggests that something is cooking. Right, I think I'm going to leave it there, actually. It was... no, let's look at some US stocks. I'd really like this big Bristol Myers stock. I've been not touched this for a while. If that pulls back, well, I'll tell you what, if this closes above this 70 mark on volume, I will get in there. In the meantime, I'm just going to stalk that. Medtronic, these are all US stocks. That's just closed a gap. So I'm not concerned about that. I will get concerned if that closes under 80. But I think that one is, these are good stocks, good cash cows. Peabody, right. Not, I think you mentioned it before, didn't you? Yeah, I don't like the chart. I think that's quite scrappy to me. Have a look. I think I might see 24. Isn't this an old coal miner? Did I get that wrong? Not for me. Making lower highs. and that might want to come down to 23, 24 or lower. Yeah, okay, so you got in at 24 and 8, right? That's a quite a significant sell on the 15th of Feb. Okay, I'm going to leave it there, guys. So US jobs on Friday. At the moment, with the weakness in the dollar, in my book, commodities are still viable on these dips. I'm still very cautious. Let's look at lemonade. Okay, I'll just look at that before we go. Still very cautious. Still largely in cash. Still sort of over 75% in cash at the moment. Yeah, we have seen some good moves in good quality UK stocks. So I do like Vodafone and BT. The pair of them just look as if they're accumulating to me. And Rolls-Royce, if Rolls-Royce can do it, then maybe one or two of these others can do it. But so apart from that, and commodities, not doing a lot here. Now, I've looked at this in the past, but remind me what they do. I haven't looked at this for a while, as you can tell. Looks scrappy to me. You might want to come back further into that January support. Well, you did that on this recent drop, didn't it? So we came down there on the 2nd of March and held. I'm not enamored with that. Insurance, right? Not enamored, but that's really beaten up, isn't it? This flew up to 183. Okay, well, I'll make a note of this one and keep tabs of this. Brilliant. All right, thanks for your company, guys. You'll break even at 14.8. Right. Well, that's all right. It sounds like you got a good price then. Most recent low was 14.5. Yeah, I'm definitely going to keep a very close eye on that one. Thanks for sharing that. Right, brilliant. Have a good week. I will again, you look for 19. Okay. Brilliant. Thanks a lot, guys. Let's see how the week unfolds and see what ultimately jobs data does for the markets. Brilliant. Thanks.